Okay, folks, welcome to Best Stock Charts for the 23rd. Members, we're going to segue into market wrap immediately following Best Stock Charts, so stick around or just click over to the market wrap link and you can just go right to it. We're going to go over some stocks that our members requested for me to review on video. So let's kick things off. A few of these are from last weekend. 3D Systems. We were watching this, we continue to watch it, and what we were looking for was a breakout above this upper band of resistance. We got that, but we reversed off the highs of the day today, so what we're looking for is a pullback and a retest of this lower band of support. It's at that point in time where we'll consider opening up a position. Now, Stokes, they're holding above 80. If you're reading Technical Analysis for Dummies, they'll tell you to short a stock when it goes above 80. Nonsense. The Stokes are consolidating. I think that they may hook up. Give it some time. I would not buy the shares now. I certainly wouldn't short them. Volume to the downside was very light today. And keep in mind, when I go over all of these charts, you have the markets, and I'm going to go over this in greater detail with members in a few minutes. The markets are near their all-time highs. The problem is that there's anxiety out there because, one, will we break out or will we break down? And as we near prior historic highs, volume is dropping off a cliff. So keep that in mind as we go over the remainder of these charts, because as goes the market, so goes most of these names, with the exception of the commodity plays and the healthcare plays that I go over. I think I only have one of those. But healthcare and commodities should do well. That will be risk-off trades. All right, so 3D Systems looking good. Not quite yet, though, ready to buy, but perhaps in the next couple of days. Apple. So we rallied back. We have been unable to recapture this prior support level at 155. I wouldn't even consider buying one single share of Apple until we close back above 155, and then we could talk about it. Because right now I have no position in Apple. It closed out the day off the highs of the day, and the high of the day was at a resistance level. I have nothing to prove here. I have no dog in this fight. So what I'd rather do is I'd rather pay more to be right by watching the shares trade above 155, then I'll pull the trigger, buy a few shares, open up a position, and then buy more on a breakout. Not until then. The stock needs to show us that it could rally. Right now, it's behaving weak, and I don't want to own that. The indicators are all putting in lower highs. Volume to the downside was light, so I'm certainly not saying to short it, but I wouldn't be a bit surprised to see a breakdown here on Apple. iRobot. I've been a big advocate of iRobot. I was a prior owner. Do I still think it could head higher? Sure. But if the markets begin to give way, iRobot's going to follow just like it did last week. So with RSI at 82.76, Stokes extended but still rising, which is a good thing, I would be a bit concerned. And as we're making new all-time highs, RSI could be diverging here by putting in a lower high. Volume has been below average, so keep an eye on volume. Volume matters. Ultimate Oscillator is not confirming the new high. So this is a classic case of what I teach members. The markets send you signals, and if you pay attention to the signals, you'll do well. If you ignore them, you do so at your own peril. Also take note of ADX signal line. We are trading well above 70. It's not supposed to be here. And we are nearing a double top. So, and we may also have a double top on MACD fast line. So be very careful here with IRBT. I think if the market goes, it will go as well. LABU. All right, so this is one of my risk-on trades. I like the weekly chart more so than I do the daily chart. But the week isn't over yet. It's only Tuesday. 3 more trading days left to go, so a lot could happen. So we'll focus on the daily chart. And right now, I don't see a breakout on RSI. Stokes Price is consolidating. We're holding support. Volume to the downside was light, which is good today. I don't see a particular reason to go buying shares right now. I would rather buy on a breakout above 49.94 as the market pulls back. Because again, what we're looking for is a risk-off trade, and LABU is one of those classic stocks that you would, or ETF I should say, that you'd want to own. And why would I want to see it rally above 49.94 on a day that the market is pulling back? It's because it'll tell me that we're seeing sector rotation. Money is leaving the high-tech stocks. The semis were down today, despite the fact the comp was up, and they're moving into healthcare, biotech, etc. But last week, on the 17th, it traded down with the market. So that's a bit of a concern. So LABU, I would want to buy on a down day in the markets when it is rallying and up and through resistance. We want to buy on strength. Facebook, very similar to Apple. It broke down last week. It has yet to recover prior resistance. There's nothing to talk about here. I like the company. I think that it's got great fundamentals, a great story. That doesn't matter. What the market is telling us right now is that Facebook could not hold its mud. It broke support last week after consolidating along a support level. Now it's trying to recapture it. So the pressure is not on us. We're sitting in cash right now, and we're looking to buy stocks that are showing relative strength. Facebook is not showing relative strength. In fact, it's showing relative weakness. It was down today despite the fact that the NASDAQ comp traded higher. Volume was light to the downside. Ultimate oscillator putting in lower highs despite the fact that we bounced off the lows of last week. Ultimate oscillator is making lower lows. RSI rolling over. Facebook, I would avoid it. I would not buy it. And it may soon be a short. Not yet, though. Twitter. I have been fairly bullish on Twitter. I started becoming bullish right around here. When the shares were nearing resistance, I said, allow for a pullback. It'll come. We'll get it. We got that pullback. We're holding $18 per share. Will it hold? I don't think so. I think what's going to have to happen here, let's update the chart. I'll be right back. Okay. I think what's going to have to happen here is that we get a pullback and a retest of the prior resistance level, which should now act as support. Meaning, we broke out back here above this resistance level in dotted blue line on May the 1st. Shorts got squeezed to death. They got brave again at resistance, and the stock is now pulling back. Traders are OCD, so what they want is for Twitter and most stocks and indexes to pull back and retest what was resistance and validate that it is now support. That would be a buy signal if it successfully does that. Now, I will caution you, beware. Both lines on Stokes trading down below 50. I said this to members a couple of weeks ago when IWM began to trade down. This is the Russell 2000 ETF. When it began to trade down below 50, I said beware of any rallies, because when you have Stokes trading down below 50, rallies tend to fail. And that's exactly what happened. We had a very bullish day here on the 8th of May. You would have expected to see follow through to the upside. It didn't happen. We consolidated another bullish day on the 10th. By this time, both lines on Stokes trading down below 50. You would have expected to see on this bullish reversal day a follow through. It didn't happen. The shares faded. Again, we popped higher. May the 15th, we closed off the highs of the day. 16th, filled candlestick, hollow candlestick. That was it. Nail in the coffin, down day on the 17th, and now we're limping back. Would I be a buyer? No way. Next chart up, LSI, daily chart. I went over this one last weekend on the weekend commentary, and I had been bearish on LSI, and this goes back a few weeks ago when we broke down below this lower band of support. I said short it. And then I warned over the weekend that on this reversal day here on the 17th, that it negated the down day here on the 16th, and that bears who were acting as complacent shorts had better get worried, because the probability of an upward move, and this is still posted on the website, go check it out. It came out last Saturday or Sunday, and they should expect to get squeezed. And you can see that we rallied. We broke out today above resistance. The question is, do we hold it? Volume is light but rising. Both lines on Stokes trading above 50. What I think is going to have to happen here, we'll get a pullback and a retest of the breakout point. The question is this now support? Or is this going to be a failed breakout? If it fails and rolls back down into this trading range, in all probability, we're going to come back down and retest the lower band of support. But I think either way, we're pulling back, and we're going to get a retest of this breakout point. And what you want to look for is on these Stokes is a pullback and a higher low get put in. And watch them hook up. Just like back here. They rallied, pulled back, hooked up. That's what you want to see again. History repeats itself. So LSI looking good. All right, we're going to talk about commodities. Without first talking about the US dollar, we'll use the UUP. I mentioned to members last night on Market Wrap that we should expect a rally in the US dollar. Why? It's because we became oversold, and I mentioned that the dollar, the UUP, was trading down below its 2 standard deviation Bollinger Band in green, and very close to the 3 standard deviation Bollinger Band, and it's really not supposed to be there, and that the probability of a rally was very high, and will probably rally back up to this prior resistance level. Now, longer term, I'm fairly bearish on the dollar. You simply need to only take a look at the weekly chart, and we broke down below a critical support level last week. Now, we closed out the week last week kissing the 3 standard deviation Bollinger Band. Again, it's not supposed to be there. So a rally on the dollar is not out of the question. I think we're going to go higher. We're going to alleviate this oversold condition. So we should expect to see a continuation move higher on the US dollar. And that will be a catalyst to the downside for some of the precious metal names. More so some than others. Platinum, for instance, won't get hit as hard. But gold, silver, they'll feel the full magnitude of the inverse correlation of the dollar and the gold-silver trade. So it's not a good setup short-term for the metals. Now, silver, we opted not to chase it. I'm glad we didn't. We had booked profits a while ago on USLV. And while we had a strong rally yesterday, today we had a bearish reversal day. Expect a pullback. Volume was very strong to the downside. Watch these Stokes. Again, you want to see them roll over and then put in a higher low from this low here. Once they begin to hook back up again, you'll want to take a look at the price action, thus ensuring that you see that you're seeing bottoming action get put in. And then you could put your foot in the water as you begin to see higher lows on price and higher lows on Stokes, as well as RSI. So USLV, I'm bullish on longer term. Shorter term, I think this brief rally in the dollar is going to put pressure on USLV. So we're going to watch. We'll look to open up a position in the fairly near future. GDXJ, same thing here as I mentioned on USLV. I don't like the GDXJ as much as I once did. Why? It's because they ran out of stock in these junior miners to buy, and now they're buying up the GDX. So it's kind of a confusing ETF to own. So that's my personal opinion. I think that technically we will probably move lower. I would not buy it until, of course, we got down to this lower band of support, or if we reverse and close out the week above this upper band of resistance. I prefer to buy at support levels or buy on a breakout or a mixture of the two. So that's what we need to see on the GDXJ. So short term, I'm bearish on it. Longer term, bullish. I think that they're going a lot higher. The GDX, the GDXJ, NUGT, all of them. Next chart up, Clovis Oncology. Daily chart. Do I like it? No. I love it. Love the chart. So we were in a downtrend, but that's beginning to change. In fact, it changed briefly last week. Here on the 18th, we broke out. And notice how on the 17th, the shares traded up despite the fact that the market was trading down and down in a very big way. That is relative strength. And it goes back to what I was saying earlier about LABU. What we're looking for are opportunities to get involved with sector rotation as the markets begin to weaken, as I believe that they will. So we broke out on the 18th, pulled back on the 19th, and we broke back down below this lower band of support. Now, normally, that's the death knell for me. That's called a breakout point failure or a bull trap. And normally, at a bare minimum, you get a pullback to this lower band of support at the bottom. And many times, it'll just break and go lower. But that didn't happen. We gapped higher on the 22nd and closed above support once again. What do we do today? Bullish reversal day. We were down, we closed up. When would I buy? I'll discuss that with members on Market Wrap. So stay tuned. A little bit more to come, members, because we could be involved with CLVS fairly soon. PI. Impinge? I think I got that right. Impinge Inc. Let me know if I got that right or wrong. All right, so interesting chart. I am already seeing a divergence set up here. Let's annotate the chart, get our crayon out, add some visuals. Okay, what I found concerning, but I'm opting to ignore it because I believe RSI has redeemed itself. What am I referring to? What the hell am I talking about? What I'm talking about is this, is that we've been putting in higher highs and higher lows. Great price action. The problem for me with RSI is that we've been putting in lower highs as we put in higher highs. That's a problem. It's really not supposed to happen. The reason why I'm choosing to ignore it right now, I'll just put it as a footnote at the bottom of my chart just to reflect back on. The fact that I'm choosing to ignore it is the fact that we broke out above resistance on RSI yesterday, and we're now pulling back. I'm looking for a retest of this breakout point. Yes, you'll get it on RSI, not only on price, but on RSI as well. So look for a pullback further on PI. I like the chart. Stokes are hooking up. They're putting in higher lows. Excellent. And now breaking out to put in higher highs. Good stuff. Stoke RSI pulling back. Not much to talk about here. You would want to take note of this. You wouldn't trade off of it. If it continues lower, below the neutral level here at 0.5, that would be a concern. But right now, I wouldn't be too concerned. If you're long, stay long. If you are not long, looking to open up a position or add to your existing, wait for that pullback and then add there. We are eerily close to the 3 standard deviation Bollinger Band in red, so I wouldn't buy the breakout. So we'll keep an eye on this one. We may get involved ourselves with PI. FEYE, we booked profits about 2 weeks ago, and the shares have pulled back, and they're holding on to the $15 per share level on this weekly chart. Let's go to a daily chart. I like the weekly thus far. The week isn't over yet. Hollow candlestick today. I'm not a fan of hollow candlesticks, filled candlesticks, whatever you want to call them. So I wouldn't be a buyer just yet. You'll want to watch these Stokes. Make sure that they hook up before you got involved with the shares. A good bullish reversal day yesterday, and we're forming a good support level at 1484. You see a close below that support level. That is an avoid signal all the way. So be very careful on a close below 14.84. Now, what I'm looking at here, folks, is volume. Volume is a concern. It's very light to the upside, and it's declining. That's not good. You'll want to see institutional accumulation as we begin to proceed higher here. You don't have that. So a bit of caution on this chart. I like the weekly chart, but you still have 3 trading days left to go. All the goodness could be replaced with badness by this time Friday. So we're focusing on the daily charts right now. The daily charts are giving me no reason whatsoever to act at this point in time. All right, this one here is from fellow member David. Nancy, if you're listening, please double check this symbol because he requested CLNR, and I have the London Exchange trading CLNR, Cliffs Natural Resources. I don't think that this is the right symbol, but I'm going to go over it anyway just in case he's over in England. And for those folks that are over in England, many prayers from us to you folks over there. I can't believe this tragedy continues to repeat itself. Very sad. All right, so to Cliffs Natural Resources, I like the chart on a daily basis, and what you'll want to look for, in fact, we'll go over in greater detail what we're going to look for on Market Wrap tonight. I'll send it out to you when I would execute a trade. But what we're looking for here is the bare minimum for Cliffs to hold the support level at 2.80. If it breaks that support level, you got to avoid it. It has a multi-month consolidation. I don't think it's worth buying at this point in time, but we'll go over a circumstance where I would consider opening up a position, and I'll annotate the chart and go over it with you on Market Wrap. So David, check with Market Wrap. And Nancy, who's my assistant out there, if you're listening, please confirm this symbol with David, okay? Thank you. And that's it for Best Stock Charts this evening, folks. If you're not currently a member, please sign up for the 14-day free trial offer. If you'd like these videos in the future, please enter your email address. We hate spam too. You will not be spammed. And if you watch us on social media, give us a like, comment. You know the deal. And members, let's begin Market Wrap. Okay, members, let's begin Market Wrap off with a review of the VIX. The VIX is clearly implying that complacency has yet again settled into this marketplace. I mentioned last night on Market Wrap that we would probably come back down and fill the gap. We did that, and we bounced slightly. We closed out the day at 10.72, so a 10 handle on the VIX. Now, why does it matter that we close with a 10 handle, that we bounced off of a filling of the gap on the VIX? Why is that important?